Mike Tedeschi, Wealth Management Advisor, Perspective Wealth Planning. With this week's market breakdown video, we're going to jump in here and take a look at the four major U.S. indexes. We'll also take a look in at the U.S. dollar and some commodities. Now, we know we had a weakness here for the last couple of weeks, and we really saw some strong selling here at the beginning of this week with a gap down on Sunday and that sell-off. However, we've rallied up since that point in time, and what I really want to point out to you guys, our uptrend is still completely intact. We did not go and make a lower low. We did not break down below the major key level here, which on the S&P 500 is at 4,200 level, and we started to make that bounce back up. We take a look in at the Nasdaq here. Right, you can see the same thing here. We did not go and make a lower low. We are still clearly in that uptrend. We actually have gone ahead and closed that gap from the weekend. So things still look really solid when we look at it from that light. The Dow, now I've mentioned this before, I almost would view this more as kind of a sideways range here over the last few months than I would an uptrend. Right, we just kind of chopped around inside this zone. So this pullback, while it took out the low from August back up here, it did not break the important support zone right around that 33,000, which is really the major level going back to March. So and it's making its bounce right off of that zone as well. And last but not least, when we take a look in at the Russell, nothing has changed in on this one. We are still inside that sideways range that we have been in since the beginning of the year. And that sell-off that we had over the last couple of weeks didn't even sniff the bottom of this range. So you can actually see we have put in higher lows now from July, August, and September in on the Russell. Again, what happens here I think is really, really important. If we fall underneath that 2100 level, I will change my thought process for the overall market. As long as we're above that, inside this range, everything is okay. And above that 2360 zone would be a major breakout. So we'll continue to watch that. But overall, even though we had weakness in the beginning of this week, we didn't break any of the charts. They all still look fine on that long-term basis. And until something changes, we can't really panic or change our stance. All right, we come in and we take a look at the U.S. dollar. The U.S. dollar tried to rally into that 93.5 zone that we had from a high a few months back. And you can see here into the Fed. Not able to hold on to those gains the next day. Today is Thursday when I'm making this video. And the Fed meeting was Wednesday. Couldn't make a breakout or a higher high. So when we look at this chart, it is still a giant messy range, right? We have technically some higher lows and some higher highs in from June. We need to take out that 93.75 for that statement to continue to ring true. And then you have all this resistance between 93.70 and basically 95 in the context of a multi-year downtrend, in the context of a 7 or 8 year sideways range. This is just a giant mess. We have no resolution here on this chart. So we're going to continue to pay attention. If we do get a resolution either up or down, that will be a big thing of importance for us to pay attention to, but as it sits right now, we're still just trapped inside those ranges. Now, when we get a Fed day, we always get some movement out of gold and the precious metals. If we look at this, really, we're not able to hold that 1800 level. And again, when we really pay attention to this chart, 1670 is the important zone, and we've just chopped and gone nowhere. Really, we're basically back at the point that we were back in last July, on that 1750 zone. We've had that slight sideways pullback. When we pay attention to, again, the chart on the long time frame, there's nothing wrong with this. This is a big move up. This could really be that cup and this handle right in here, right? So we haven't broken any of the long-term chart look at all here. But we really need to get back up over 1900 before this market gets interesting, or underneath of that 1670 level for it to get interesting in on the downside. We come in and look at silver. Silver's holding on to that 22 zone, right? We've talked about this. When we go back all the way to July, this had been putting in a series of higher lows in play and looked a lot better chart-wise than gold did, right? Since that point in time, we've come down, we've tested this 22 zone, we've bounced up, we've come back, we've tested this 22 zone, and we're just barely holding on here. So that major level of support's right in at 22. You lose that, we lose this basically year-long Darvas box, and that would be a very bad sign. All right, we're right there kind of at the bottom. We're at an important level that we need to keep watching. As long as we stay over that 22 level, we're okay. Underneath that 22 level, inside the silver market, you're probably looking at a move back into the 1920 zone, which would be where that breakout was. And then underneath that, you're looking all the way back towards that 16 level. We come in and we take a look at platinum. I put this out last week at 900. This level is so key. And what did? We came right down to it, and we made a strong bounce right here. Okay, this actually was a little bit under 900 in the middle of the day. I think 892 was that low, all the way back to 1,000. So a 13% bounce in 2 sessions, right off of that major support level. This is the kind of action that you want to see around a level of support. A very clear, swift, and decisive rejection of that level. All right. If it hangs around for a while, then you have the propensity for it to roll over. When it comes down and tests the level and makes a really sharp bounce, that's a good sign. Now, for this market to get interesting again, we actually need to get back up over this zone right in here. So you can see the importance going all the way back to June from the low, and then you can see this as resistance in August and September. A move back above this, and I think that this kind of can be looked at as a short-term, maybe a longer-term low that's put in place. If we don't get back up above this, this is just a really sharp bounce, and we are making lower highs and lower lows here over the last 4 or 5 months. So you really need to negate that and get back up over that 1,050 zone. But the rally that we saw the last couple of sessions was the first time in a while that we got some positive view out of the platinum market. Now, when we come in and we look at palladium, I put this on this chart here for us last week as well. This 1,700 to 1,800 zone being that major level of support going back to last May. What did we do? We came right down to it, and we made a really strong bounce there as well. Right? Percentage-wise on this one, we went from about that 1,800 level back up over 2,000. So about a 14% bounce in 2 sessions as well. That's a swift rejection. Now, we have a lot of issues on this chart above us now at this point in time. 2,100 is an important level, 2,200 is an important level, and then 2,500. This really has fallen apart here over the last couple of months. This is a nice bounce off this 1,800 zone, but this chart is still an absolute mess. It's not one I really would be interested in. If we get back up over 2,200, I might change my mind. But when we look at the metals here, in an inflationary environment, we just did not get the pushes that we were expecting here this year out of these spaces. Now, things like copper are holding on just fine, but it's accomplished nothing since February, and that's not something that makes a lot of sense when you think about the environment that we're in. If we start seeing a breakdown out of copper, then we really have a problem there as well. So underneath that, 396, that's a bad sign. Let's now jump in and let's take a look at oil. All right, oil in between that 60 and that 75 zone held that low area in on here, has made our bounce back up to the top of the range. We know the importance of the 75 to 77. Over this, we're kind of open. All right, we can really make a run. But again, if we look at where we were at in February, all right, we're still in the same range. We're above where we were in February, but we're inside this range between that 65 and that 75 zone. We're really looking at all of these markets for that next move, whether it's up, down. We don't know because a lot of these are sideways ranges when we're looking in at the commodity space. A large move can very well happen from these levels. But up or down, our job is to sit, wait, and look for whether we're actually getting that break up or that break down and go with whatever direction the market's telling us. When we've got ranges like this that we've been trapped in for a while, we know those Darvis box breakouts, those range breakouts can be some very powerful moves. And we've been talking about them a lot here over the last few months. We just haven't gotten any resolution. And that's fine. After the incredible move, and I want you guys to really think about this, after the incredible move we had in a lot of these commodities from the lows of last year, moving sideways for a long period of time and digesting these gains is completely healthy. It would not surprise me if we were trapped in between that 60 and that 75 zone in oil for another 6 months, right? Digesting that move. However, it doesn't matter if it happens next week, 6 months from now, whenever, we need to be interested in this market if it's above that 77 zone. That would be a very clear indication that it looks really good. The last commodity I want to talk about is natural gas. An incredible move here over the last few sessions. The $5 to $6 zone is decade-long resistance, and you can see we got that big spike up and we've fallen right back to the level. This monthly close is really, really important. We haven't had a monthly close over the $5 level since we go all the way back here to 2010. So that would be a very big level to close above. So we're watching that closely here into the end of the month to see if we can glean some insight into that energy market. The last thing I want to touch on here, during that sell-off that we had over the last week or two, the dumb money, smart money confidence indicator flipped for us, okay? So the dumb money was more bullish on the market 3 weeks ago and is now back to the lowest level it's been in months. That's actually the lowest level it's been since, well, this goes back to July of 2020, so over a year at this point in time. The smart money at the same point in time is now more confident than it has been at any point since July of 2020. So on that sell-off, smart money got bullish, dumb money got bearish, and this bodes well for that follow-through potential for the upside. As always, what we have to do is we actually have to see it make that breakout. So the S&P 500, if we get back up and we break over that 45.50 zone, that would be a very, very good sign. That is what we're watching. And on a percentage basis, we're really not that far away. We're about 2% away. This sell-off here was only about 5%. So it was not that deep of a pullback at all. And like all of the other 5% pullbacks that we've had this year, we have one here. This was about a 4% one over here. And we had about a 4.5 here. And I believe this one was about 5%, 4.5, 5%. Every single one of them has rallied straight back up on that V-shaped kind of curve, make new highs within the next week or so. And that pattern is starting to once again play out here. All right. We have to see it actually go and make those new highs, but it looks pretty good for that to actually happen. All right. We break underneath that 4,200. It changes the structure of this market. Until then, that uptrend, it's still in play. Still need to continue to pay attention to that. As always, I hope you guys found this content useful. If you have any questions, feel free to reach out to me at mtedeschi at perspectivewealthplanning.com, or you can give me a call at 814-580-9881. I look forward to hearing from you guys, and as always, I'll see you next week. Take care.